Hey traders, you're welcome back to the Forex Geek channel. In this video, we are going to be diving into one of the most focused and effective methods for trading bearish market conditions, okay? And that is simply the short only strategy, all right? As the name implies, it's a strategy that focuses on only bearish trades, okay? It's a short only strategy that we're going to be discussing in this video. Okay, now this approach is perfect for those who prefer to capitalize on downtrends, and it is an essential tool for navigating volatile forex markets. Okay, so in this video, we're just going to be breaking down everything that you need to know, from identifying reliable short setups to managing your trades with confidence. All right. Now, before we get started, make sure to hit that like button and subscribe to the channel for more straightforward trading strategies and tips. Now, let us get right into it. Let us begin with a quick overview of what the short only strategy is all about. Now, this strategy focuses exclusively on selling opportunities in the market, okay? Meaning that, you are looking to profit from price decreases, all right? So now you might be asking, why focus on shorts? Okay, perhaps if you are not a fan of trading in one particular direction. But one of the reasons why some traders might want to focus on short trades is because bearish trends can often move faster and more decisively than bullish ones. Okay, thanks to fear-driven market activity. All right, so with the right tools and techniques, short only trading can help you take advantage of these swift price movements. Now, the key to this strategy lies in identifying strong downtrends, okay, pinpointing your entry and exit points, and maintaining disciplined risk management. All right, but don't worry, I'm going to be walking you through each step. Okay, now, how do you find reliable short setups? The first step is to identify a strong bearish trend. Okay, so that's where we're going to be starting. Yeah, you have to identify a strong bearish trend, and as you can see in this particular example, we have a strong bearish trend here. Okay, now after you have identified the bearish trend, you want to look for consistent lower highs and lower lows on the chart, like what I just found here. Okay, these are classic signs that the market is trending down. Now, to confirm the trend, you're going to use a combination of tools like moving averages. Okay, um you can start to use moving averages or trend lines, right? I already use trend lines on the chart, but you can also decide to add a moving average to the chart as well. I'm just going to be adding the 50 period moving average. All right, now it's a good indication of a bearish trend. We can see now that as the price got rejected around this trend line resistance and dropped below the moving average consistently, it was being rejected below the moving average. The moving average was serving as a ceiling, right? So we can see that this is a good bearish trend. Now, another helpful tool is momentum indicators. For example, the RSI, the relative strength index. So you can actually decide to also make use of the RSI. Okay, if the RSI is below 50, it often confirms bearish momentum. Okay, so you might want to combine this with price action to strengthen your analysis before entering a trade. Okay, so once you have identified a setup, it is now time to plan your trade. Now, your entry point should ideally be just below a confirmed support level. Okay, for example, if the price breaks below a key level, let's just use a very good example. We can see that we had a key support level around here, and we literally had a breakout from this support level. You can see that we had a breakout from this support level. Now this is going to be a signal to enter a short position, but do not stop there. Okay, planning your exit is just as important. So set a stop loss just above the most recent swing high, which is going to be around here. Okay, that's to protect yourself from unexpected reversals. Then for your take profit level, you can look for the next significant support. Yeah, so for the next for your stop loss can be somewhere around here, and for your take profit, next significant support can be around here. Okay, you just have to look for a significant support, that had a previous points of rejections, right? A place where a price level where there was previous rejections. Okay, and then in addition to that, it's important that you use a good risk to reward ratio as well, at least 1 to 2. For example, if you are risking about let's say you're risking about 40 pips, your potential profit should be at least 80 pips, right? So in this scenario, we are risking about 430 points. Yeah, that's about 43 pips. And then we are potentially targeting about 94 pips. Okay, so that's a good one. Yeah, that's a good one. Risking 43 to make about 93. Okay, because minimum risk to reward ratio I recommend is 1 to 2. So ideally, the minimum profit targets should be times 2 of 43 pips, which is going to be 86. All right. Now remember that patience is crucial. Okay, so wait for the breakouts to be confirmed before jumping in. False breakouts can be common in forex trading. Okay, so do not let the fear of missing out cloud your judgment. All right, now let us talk about managing your trades once they are active. One of the best practices for short only strategies is to trail your stop loss. Okay, it's important to trail your stop loss as the price moves in your favor. Now, this helps you to lock in profits while giving the trade enough room to breathe. For example, if the price creates lower highs, okay, let's just use this bigger trend, right? You can see that we had a high here, we had a lower high, we had a lower high. This was somewhat of a few series of lower highs we had around here. So we have lower high, lower high, lower high, lower high, right? So if the price creates new lower highs, you're just gonna adjust your stop loss to just above those levels. So if let's say you had entered a sell around here and maybe your initial stop loss was above here. So once this new high has been formed, you have to bring your stop loss down above the new high. Once a new high has been formed again, you bring your stop loss above the new high, and so on. Okay. Additionally, always keep an eye on market conditions. Economic news, major announcements, or changes in volatility can all impact your trade. So stay flexible, all right, and be prepared to close your position if the market shows signs of reversal. Now, before we wrap up, let's go over a few common mistakes to avoid when using the short only strategy. First, do not enter trades without proper confirmation. All right, jumping in too early can lead to unnecessary losses, right? Especially if the price reverses. Secondly, never skip risk management. Okay, always use stop loss orders and stick to your predefined risk to reward ratio. Finally, do not overtrade. Okay, just because the market is trending down does not mean every move is worth trading. So you have to be selective, and focus on high quality setups that align with your strategy. And there you have it, the short only strategy explained step by step. With this method, you can confidently navigate bearish forex markets and make informed decisions based on price action and momentum. If you found this video helpful, don't forget to give it a thumbs up and subscribe to the channel for more trading tips and strategies. Let me know in the comments if you've tried the short only strategy or if you have any questions. I'd love to hear from you. Thank you for watching, and I'll see you in the next video. Happy trading.